Apple is down huge today because the U.S. is suing them as we speak. They're down over 4% to 171. If you remember, all-time high, December 14th, just 3 months ago, of $199 a share. It's all the way down to 171. That's 15% almost down since then. Now, why are they being sued? Well, they're being sued because the U.S. government says they're being meanies. They're not letting people alter their phones, make things, yada, yada, yada. I get it. It's like Microsoft back in the day. It's like Amazon's even having conversations about the U.S. government suing them. The actual lawsuit here, I want to talk about. Justice Department says iPhone maker leveraged its dominance to block software and limit functionality of competing devices. Can I ask everybody a question? Is anybody surprised by this? I mean, it's Apple. They want to own your experience. They want to absolutely own every experience you have. Guess what? Full disclosure, I have an iPhone. I love this iPhone. I hate MacBooks. When it comes to laptops, I absolutely can't. I've had 2 or 3 MacBooks. I've absolutely hated them. The only reason I like them is it allows me to hit iMessage on the MacBook. And I think it's allowed on Windows now. I just haven't figured it out. I can't stand it. Guess what? Spoiler alert. WhatsApp is better than iMessage. Now, if you don't agree with me, I get it. Say it in the comments. But I think Apple makes really, really, really wonderful phones. And I belong to Apple, what's it called? Apple One, where I pay $35 a month. I get a bunch of news articles. I get Apple TV, family plan. I love it. I love Apple TV, the actual device. Wonderful experience. But the question is the U.S. government justified in doing this? I don't know. There's a lot of things to talk about over here about the U.S. government. So, the Justice Department and 17 states have sued Apple on Thursday, alleging the tech giant blocked software developers and mobile gaming companies from offering better options. You know where I have a beef with Apple? It's on the App Store side, and that lawsuit is ongoing as well. We have a problem saying when they want 30% of every dollar that goes through, it's like, hang on a second. I get it. I do understand that there's a value to being on the App Store. 30% of our, that's a big chunk of revenue for a lot of companies out there. That, to me, is the bigger issue. To me, that's more monopolistic. But again, they can get away with it. We just drive people more to our website in order to do that. Now, here's something I find funny. Attorney General Merrick Garland says Apple has maintained its power not because of its superiority, because of its unlawful exclusionary. Guys, I'm sorry, this is the best phone out there. I don't care what anybody says. Like, they're superior. They make a great product. They care about the user. They care about the experience. I have a hard time believing that it's not because of their superiority. They're superior. They're an awesome company. Tim Cook, or as Mo calls him, Tim Apple, has done a great job of taking over the reins from Steve Jobs, RIP, and building the company even bigger. I thought that was going to be a very difficult thing to do, and they've absolutely dominated. They've made Apple a requirement in your home. And that's incredible. But again, is this news to jump on now and say, hey, the stock's down? If you're an investor in Apple, you should want this to go even further. Just like Microsoft being sued back in the day. Let's check out some things on Apple here. So first off, it just got surpassed recently from Microsoft as being the largest publicly traded company. But look at the difference here between market cap and enterprise value. The difference between 2.66 trillion market cap is all the shares, buying all the shares outstanding, and the enterprise value is including all the debt and the net of cash. It's only $200 billion, which you might sit there and say, that's a lot of money. Not when you have this number, $107 billion in free cash flow last year. $107 billion. And guys, look at this. Their gross profit margin is only 45% because they get so much hardware. Hardware is not a big margin business. Software is. But their profit margin is going up. I think they're doing better with their subscriptions and their software. That's what I love about Apple. 5-year average is 24.5%. 1 year, 26.2% profit margin. That profit margin's up. And look at this. 0.6% dividend yield still eats up $15 billion of their money. They can easily afford it because they generated $100 billion last year. So it's not a dividend play at all. And the cheaper the stock gets, the more I want this dividend going away and them buying back shares. You know, Warren Buffett took a big piece in Apple, and I believe his price was $140. Now, you got to remember, Warren Buffett's trying to add longevity to Berkshire. I don't think he's going to be as picky about getting a huge margin of safety, especially in a big company. He needs to find big enterprises where he can make big bets and keep that capital preserved, plus get a decent return. And I love the fact that Tim Cook is learning every single month from Warren Buffett about how to allocate the capital in the business. Because guys, it's the most important job of a CEO. How do they take the cash in the business and put it for the best use? Guys, Apple can't reinvest $107 billion a year. And there are 5 things you can do with free cash flow. You can buy back shares, you can pay down debt, you can make investments, invest back in yourself, so make acquisitions, invest back in yourself, and pay dividends. Those 5 things that can be done. Okay? It's going to be hard for them to reinvest back in themselves at this kind of level. It's going to be hard to make an acquisition large enough to move the needle much. So, to me, it's all about buying back shares that are cheap and paying out dividends. I personally believe in one-time dividends. Don't get people relying on this dividend. This dividend's so low right now. Apple, do me a favor. Just cut this dividend out right now. Stockpile your cash as your stock price goes down. Tim Cook, do me a favor. Have a couple scandals here and there. Cause a couple problems, get some private investigators going, make that stock crash, and start buying back your shares. That's what I'd love to see. I laugh about this because I really wish Tim Cook would do it, right? It's not true, but the point is, if the fundamentals of the business stay the same, and the question is, will this federal lawsuit, people want Apple to be dominant. They do. They absolutely do, because Apple is still a great company that cares about its users. That's what I like about Apple. Now, not all the facts have come out yet. More will come out as time goes on, so I might be speaking prematurely about this. But again, that is why, actually, you know what? I'm going to go in the community right now and ask that question too. So I'm going in the community to have the conversation about what is going on with Apple, and I did Reddit too, because Reddit was up like 60%, almost 70% today on their IPO. So the question is, what do these things mean? Because investing, you're watching the video because you want to make more money. And investing, though, what people have to remember is it's about merging a process with emotions. But most people forget the emotional part, but that's probably the most important part. The most important part is when you see this stock fall further, let's say it goes to 100, and I'm being extreme here. It might never get to 100, it might do it. It might get lower, I have no idea. But if it got to 100, do you have the emotional ability to take a step back and say, nothing in the business has fundamentally changed? That's the hard part. We've all made emotional decisions because of money, and we've paid the price for it. And it's not just you and me. It's the greats, Warren Buffett, Seth Klarman, Howard Marks, Charlie Munger. Everyone in their life at some point has made an emotional decision that cost them money. And that's why I spent millions of dollars making this community so we could be around each other, because investing is a lonely road and it's all about handling your emotions best. That's why the community of thousands of investors in here can talk to each other. That's why I go out there and reach. I want to see what everybody's saying about Apple. I want to see what people are saying about Reddit and eBay and all these other companies to get the other angle of what I'm looking at. Because we can all sit there and find the ideas to buy or not buy, but we need to understand the opposite side of it as well. That's why we have the community. So if you want to change your whole outlook on money and make more money, we have click the link below, great offer, $7 for 7 days to get full access to the software, but realize how it's going to change your life. Click that link below, sign up now. Now, let's look at the analyst estimates for Apple. Now, these probably haven't been updated since this lawsuit, but we have 39 analysts expecting almost $6.73 per share in profit, growing to $10 a share in the next 3 years. That's high single digit, low double digit growth. That's for the EPS. Now, here's what's interesting. Look about revenue. Revenue's growing 3.5%, 5.6, 6.5, 12.9, 7.7, from $400 billion this year to $552 billion in the next 4 years. That's big growth. It doesn't sound like big growth, but Apple's huge. To have these kind of growth numbers is huge. So when you're trying to value Apple, yes, you have to consider these lawsuits. That's why we have margin of safety. You have margin of safety because of 3 reasons. 1, the future is unknown. 2, valuation and investing is an imprecise art. You can't get exact. Charlie Munger and Warren Buffett always said, we have different values for Berkshire. But 3, most importantly, we're human. We make errors. We make emotional errors. That's why I talk about the community. We're all going to make these errors. So let me show you guys my analysis of Apple. When was the last time I did Apple in our stock analyzer tool? Just March 11th, a mere 10 days ago. So guys, here are my assumptions from March 11th. I did revenue growth of 3, 6, and 9%. Not huge, not small, but reasonable revenue growth. Lower than what the analysts thought. I did profit margin of 21, 24, and 27. Now, guys, the interesting part about this is this might be low because as they grow their subscribers to their software, that's going to be higher margin. Like people are commenting already on Apple. So on the free cash flow, if you notice right here, their free cash flow tends to be higher than their profit margin. So I actually went a little bit higher here. I did 24, 26.5, and 29%. Now, PE. Guys, what are you willing to pay for Apple? What multiple in 10 years do you think Apple is reasonable? This is what makes it difficult. I did 19, 22, and 26. Is that right? I don't know. Remember, Warren Buffett bought Coke in 1987 at 30 times earnings. Is Apple like Coke? Probably not. But is Apple awesome? Yeah. So I just put 19, 22, and 26. And for those of you who have our community and software, put your own numbers in and share them with me in the community. And finally, desired return of 9%. This is the market return. So I'm looking at it saying, what do I think Apple's worth today as its own to match the market? 9% return. This has no margin of safety in. It's up to you to decide what margin of safety you want. Do you want, as you go higher, you should have a higher margin of safety, which means a higher desired return. But what's the reasonable price? Is it 10, 11, 12%, 10, 12, 14? That's for you to decide. How bad do you want Apple? How conservative were you here? How reliable are these things? I could understand if somebody said to me, no, Paul, I put 4, 7, and 10% in for revenue. Actually, you know what? Now that I think about it, I'm going to do this. I'm going to do 3.5, 7, and 10.5%. I'm going to hit the analyze button. And guys, the stock's currently at 171. And again, no margin of safety here. I have a low price of 95 to 110, a high price of 260 to 280, a middle price of 157 to 173. So it's probably selling pretty close to where it's probably worth. Is that enough for you? Do you want a margin of safety? Again, guys, if you want access to the software, you want access to the community to make better emotional decisions, click the link below. And if you want to see the 13 stocks I currently own that I can discuss, click on our next video. Thank you for your time.